Good afternoon. It is Sunday, January 4th, pre-market opening, and we would like to give you a little insight into some of the technical levels that we here at the FX Lighthouse Letter are looking at for the upcoming week. As you know, it will be sort of a busy week. I'm sure that there will be decent volatility. Right now you have the Dow sitting a little above 9,000. That's a huge level. I'm not sure if it can sustain it above 9,200. So if it starts tanking pretty quickly back down to 8,400, you might see some dollar strengthening. But other things going on this week, you have tomorrow the FOMC member Yellen speaking at 1:15 Eastern Time. Don't really look for that to be that big of a deal. However, on Tuesday, we have the ISM numbers, pending home sales, factory orders, and then in the afternoon, FOMC minutes, followed up Wednesday by ADP non-farm employment change, and the week is rounded out with the monthly employment report data on Friday. So volatility, it's possible that it's going to creep back up here. As you can see on this 4-hour chart of the euro against the dollar, I've drawn in some Fibonacci levels, starting near the top, right above the all-time high, slightly above 160-ish, going down to the recent low that we saw at the very end of October. Now, if you follow along here from the bottom, there was a little indecision, and finally everything went parabolic, and we just flew all the way up to this 146.25, 61.8% retracement. We actually poked through just a little, but for all intents and purposes, it held. And as we zoom in, you'll be able to see that, yeah, there's the poke through. And usually when that happens, when it moves that quickly up to a 61.8% level, I really like to see a hard bounce that just goes through the 50% and goes straight back down to the 38.2% level. It looked like it was going to do that. I thought it really was going to go to that 137.50, which is the 38.2% level. It stopped shy at 138.26, 25, depending on your charts, and then slowly crept back up slightly above the 50% line, and has just been kind of consolidating ever since, making a small move back down to the 138.25 level. Now this is pre-open. We closed on Friday at 138.80. There's no telling which way it's going to move in the next few hours. However, I wouldn't mind seeing a move to 137.50, but this little descending triangle is being drawn in, so you might see a move up to what appears to be 141.50-ish. So a short maybe around 141.45 with a really tight stop might not be a bad idea, but try to use these basic levels and match them up with however you trade yourself, and hopefully they will be of some assistance. For today, if you zoom in even more to the 10-minute chart, you can see I've drawn in a little resistance line which appears to be at 139.90. Now, I wouldn't be surprised these afternoon drifts on Sunday to go all the way back up there, but again, that might be a good position to short it. To me, I see the 4-hour trend as being slightly bearish for the euro, so if we see a little flag up, then I wouldn't mind potentially putting a short there, but again, it's completely up to you. Now, let's go back out again to the 4-hour chart so you can see all of these levels drawn in and how they actually kind of tend to meet up. So here's the 4-hour chart once again. Here's the 4-hour chart. Now that you have Now that we have gone over some of these levels, starting with the 4-hour and zooming in, we're looking again at the original 4-hour chart. I'll zoom in once again so you can see these levels. And there's that descending triangle. I think that's going to be important, but we'll see however Looking back at the 4-hour chart, we can see that all these levels Looking back at the 4-hour chart, you can see to me the most important thing would be to zoom back out to your 4-hour charts, throw in those major Fibonacci levels. Those are going to be your major guidelines, and depending on how things go for Tuesday and Wednesday with all those different figures coming out and seeing how the Dow goes, just try to react accordingly. Stay calm as if you Looking back at the 4-hour chart once again, I think the most important thing to do would be to throw in those Fibonacci's that you can see here. Those are going to be your most basic guide. That 137.50 level is a big level. I really want to see it happen. Not sure if it will, but I don't know. I'm kind of leaning that direction personally. We have a lot of stuff going on for Monday, Tuesday, and Wednesday. I'm going to try to get another one of these free technical outlooks posted again on Wednesday after the ADP figures are released. And we'll try to recap and re-strategize and just go from there. So thank you very much for tuning in to the FX Lighthouse letter brought to you exclusively by Squires Capital Management.